Doug Casey and I started something new. We call it Experts Roundtable. It's kind of like Shark Tank. We put a resource company in front of a bunch of no-nonsense experts, let the company give their pitch, then our sharks ask questions. Some of these great experts include Mickey Fulp, Ed Bugos, Brent Cook, Byron King, Lawrence Rolstein, Nick Giambruno, Adrian Day, and others. If you're interested in how real experts do due diligence on these resource companies, you'll get a lot out of these sessions.
We've just raised $35 million at equivalent of $3 a share here. On that basis, we're trading at 10 to 15% of our net asset value. Very low valuation for us to all make money on. If we lose one or two of these projects that don't come to fruition, we still have a very strong story ahead of us. Ornite rich, producing a 45% copper concentrate on European soil without the need of even trucking the concentrate to a port. We've got exclusive right to buy them for 10 cents from the municipality, and we have the rights to extend historic mining tunnels and to do underground drilling on high-grade copper zinc resources. These three projects have seen little to no exploration for decades and have not had the capital to advance them like they should have. And so a combination of those things should lead to very dynamic news flow and an understanding of the asset value that we have here. One thing, though, that is really neat about this portfolio, and I said this to Hartree and Scott when we left Norway at the end of January, was in 5 years, I can't tell you which of these three projects is going to be the most valuable.
To me, the real juice is coming at the end of these conversations. That, he should have started with that picture of the portal or Nuclear and saying, this is why Ross Beaty has come into this project along with all these other great institutions. This project has a feasibility study that was nearly completed under JORC compliance. Won't take that much, $100 million in financing necessary to get into production and look at all the upside to it.
All right, go ahead, Christian. Blue Moon Metals.
Well, hello, everyone. Thanks for tuning in here. On the call is myself, Christian Cargo-Simard. I'm the president and CEO of Blue Moon Metals. A little bit about my background. I'm a metallurgical engineer turned investment banker turned mining entrepreneur, CEO, mine builder, all of the above. My last company was a company called Aventus Mining Corporation, who built a copper business in Ecuador from scratch and sold to Silvercorp last year for a few $100 million. We were short of building a mine, which Silvercorp is now in construction on. And so we decided to bring the key members of the band together, including the board, and do it again in Blue Moon Metals with a focus on picking up advanced stage development assets, construction stage, and operating assets to build the next junior base metal miner, which hopefully in the next 5, 10, 15 years can become a mid-tier and then a senior. There hasn't been a company like that, like a Capstone or Lundin or First Quantum as examples for quite some time. And we're a bunch of 40-year-olds that have done it at least once or twice before and are hungry to make a big win in the market. On the call with me is Scott Mueller, President and COO of Blue Moon. He just joined us. He had a similar role at Aventus. Scott, do you want to introduce yourself?
Sure. Good afternoon, everyone. So I'm from the U.S., from Idaho originally. After high school, I was in the U.S. Air Force and then went to engineering school. Started out in the oil and gas business working for an EPCM firm, but very quickly got into the mining side. And have spent most of my career on owners teams. After EPCM, I started working for owners teams, working on projects in Ecuador, in Chile, in Brazil, and in the US. Most recently, as Christian said, leading the development of the Curipamba El Domo project in Ecuador, where I lived for 2.5 years. Until joining Blue Moon here 1st of March. So I'm 18 days in the role, but really glad to be back with key members of our team from Aventus.
So how did the Blue Moon story start with us? After the sale of Adventus, we got an unsolicited call from the CEO of Blue Moon. Blue Moon was being caretaken, you can call it, with the Blue Moon zinc gold asset in California. The CEO told me, look, we got a project equal to or better than what you had in Ecuador. If you'd like to take this on as your next vehicle for growth, here are the keys to the company. So over a few months, Maurice Belanger, Haytham Hoadley, and myself were voted in the AGM on the board, and we started with that US project, which we'll talk about in a bit. Haytham from Wheaton said we should take a look at the Nucir project in Norway, and that resulted in then 3 acquisitions of private companies in Norway. And now we're trading about 6 months later after this all started. There are some similarities in the US and Norway in that historically you would have not thought of these countries as mining countries or easy to permit or advanced mining projects. But with the geopolitical shifts ongoing in the world and policy shifts, these are 2 great countries, I think, to be developing mines. And we're seeing very good support from both governments to get our 3 projects moving. So as I mentioned, our focus is construction and operations. That's what our team that is being assembled has done very successfully in due course. And we have 3 of such projects that we think can be built, or at least start construction this decade on all 3. These 3 are brownfield projects. They have little to no royalties, no debt, no streams. There is significant internal financing capability, which results in us having to raise little equity to put these into construction. They have also had owners for the last few decades that have not prioritized exploration. And I would say each of these have a strong ability to at least double the resource base. So what have been the most successful stories in the mining sector in the last 5 years? I would say the juniors that can marry development, construction, production path, with the ability to finance standalone with exploration at generating high margin type projects. And those would have been, of course, Silvercrest 1, Silvercrest 2, Adriatic, Firefly, Foran, as a few examples, Skeena, a little bit larger. But these are the type of projects that I think are very good comps to what we have. But we have 3 of them rather than 1 of them. And that's the exciting part here. We've just raised $35 million at equivalent of $3 a share here. On that basis, we're trading at 10 to 15% of our net asset value. Very low valuation for us to all make money on. If we lose 1 or 2 of these projects that don't come to fruition, we still have a very strong story ahead of us. To go through the sequence of our projects and the milestones to look for, the first project in the mix is Nucir. This is in northern Norway. What you see is what you get. The water is a deep water fjord, ice-free year-round. The average temperature is 2 degrees Celsius. We have a sediment-hosted copper deposit, boronite-rich, producing a 45% copper concentrate on European soil without the need of even trucking the concentrate to a port. We own 2 ports at this site. There's a mill building there. There's barracks. There's high-voltage power at 3 to 4 cents a kilowatt hour, and there's a currently operating aggregate mine. There's about $100 million of infrastructure that's there on a replacement basis, which will drive a very low capital cost restart of these operations on a newly discovered sedimentary hosted copper deposit, which is like the Cooper-Schiefer in Poland. This morning, we had a press release summarizing that our 4 key operating permits or primary permits for the project have all gone through the maximum appeal process and can no longer be appealed. And so we're full speed ahead in terms of construction and getting into production here mid-2027. The equity we just raised is the equity component we need to build the mine. We expect the remaining capital costs of the project to be project financed sometime next year. Right now, we are preparing with our underground miner LNS to start underground development later this year. Following Nucir, we've got the Blue Moon volcanic massive sulfide project. The most similar project to this would be Adriatic's project in Bosnia, although the metallurgy here is as good as it gets as a VMS. This was a historical open pit and underground mine by Hecla decades ago, but as a result of that, this project has a vested mining right, which means it has an environmental license in perpetuity. Despite it being in California, this project has all the characteristics you're looking for a quick permit process. You have private land, a vested mining right, a water discharge permit in good standing, and a county that has a total of 20,000 people and needs development. We just published the maiden PEA on this project a few weeks ago, showing near 50% rate of return after tax using prices from 2 weeks ago. It's absolutely a mine. We think the resource is going to double or triple in size, and we'll be submitting our permit application for an exploration decline at the beginning of June. We hope to start that decline development in the first half of next year and be in full construction mode once Nucir is in production. The third project we have is NSG. It's a VMS district in Norway. Historically, it was the most significant copper mining region in the country. They produced 26 million tons at around 2.5% copper equivalent over 100 years. We think the district has 50 to 100 million ton resource potential. So like a Bathurst camp, a Flin Flon camp. And we inherit all the historical infrastructure, including all these process plant buildings. We've got exclusive right to buy them for 10 cents from the municipality. And we have the rights to extend historic mining tunnels and to do underground drilling on high-grade copper zinc resources. This is currently our third project that we'll look to put in production. But if we have any delays in permitting in California, we can switch the sequence of these two projects. Our goal here is to drill, make new discoveries, build, start generating cash flow, re-rate, and then become a consolidator in the junior base metal space. And by doing so with this strategy, we are already attracting the best talent in the business, such as Scott. And we're also attracting very strong shareholders, which I'll go over in the next slide, but includes Wheaton Precious Metals, Hartree, Ross Beaty, Altius, Baker-Steel, LNS, Monial, which is a Norwegian billionaire family, and a bunch of the principals at Haywood. Our chair is Maurice Ballanger. She's known for mine building. She recently turned around IAMGOLD as chair and CEO and was the president and CEO of Atlantic Gold up to the sale to Santa Barbara. Haytham Hoadley is the SVP at Wheaton Precious Metals. Francis is from Baker-Steel, and Karin is from Norway. We haven't listed all the members of our management team, more to be announced. You heard from Scott. Francis was our CFO at Aventis. Theo was the head of exploration at Adriatic when they made the significant discoveries to triple the size of the resource. We just closed a whole bunch of transactions, and we completed a 10-for-1 share consolidation. 51 million shares outstanding. We raised the money at $3 a share, so that gives you 150 million Canadian market cap. Or in US dollars, a market cap of 108 million and an enterprise value of $89 million US. That gives us that 0.1 to 0.15 times multiple. The majority of our shares are an 18-month escrow, so all the Norwegian businesses we bought has an 18-month escrow. We currently have around 17% of the float that is free trading. As you can see, very strong shareholder-based long-term shareholders. We have little institutional investment at this point. That's a whole bucket that we will rely on in the future. But right now, our focus is pushing a retail following on the story. Nucir, mentioned, is a sediment-hosted copper deposit. There's about a 70 million ton 43101 resource at 1.3% copper equivalent. We're looking at a 6,000 ton per day underground mine with a processing plant right next door, producing 15 to 20,000 tons per annum of copper equivalent for 15 years. Our ultimate goal on this project through exploration success is to get this project to 50,000 tons per annum of copper equivalent production for 25 years on European soil with a 45% copper concentrate at first quartile cash costs. That would make this mine a $1 billion mine. But we believe it has all of the pieces to get there. Why are we so confident on the exploration upside? Here's a long section of the deposit. The red are the reserves, the gray are the inferred resources. This is 10 kilometers long. This resource daylights to surface, and the resource that is a 4311 compliant resource today goes down a few hundred meters. There are only five holes below 700 meters, one going down to 1.1 kilometer depths. We hit the resource exactly where we expected it to be, and the highest grades are coming at depth. So we already know we can double, triple, maybe quadruple the depth extent of this deposit, therefore doubling, tripling, or quadrupling the resource. So it's just a matter of time. We don't need that size of resource today, but it gives us the path to that production expansion growth in due course. In Northern Norway, you think things are expensive. It's the opposite. Power is the cheapest in Europe, sometimes negative in cost. We drill here all in, including geology and assaying, for $115 a meter. The mining cost is some of the lowest in the world. The miners in Norway through LNS can long hole open stope between $15 to $20 a ton. And we found that Norwegians really want to stay in Norway, do good work for Norway, and retire there based on the strong safety net. So we think we've hit the jackpot in terms of Scandinavia as a whole, but also Norway in terms of a low-cost structure. Blue Moon, as I mentioned, is in an excellent spot for development and permitting. We're about a 2.5 drive due east of San Francisco, with an existing 8 million ton resource at around 13% zinc equivalent net of recovery. That's exactly the size of resource that Adriatic started their mine construction on as a reserve. The results of the PEA are here. The key thing here is it's robust at any price deck, first quartile cash costs, and you're looking at annual EBITDA of $88 million, annual cash flow of $65 million over the first 5 years using long-term consensus pricing. Our NSG project, I talked a little bit about the history. The most exciting part of it are the grades and the future exploration of this district. There are 4 known VMS lenses in this district connected by existing underground development. The most important deposit is the RD zone. These are some of the highlights of the drilling. We have the permits to extend the historical mine tunnel for 1 kilometer. We will hit in drifting underground within 200 meters some of these results. We expect to start drifting into this ore zone in the 3rd quarter of this year. And while we're building Nucir and getting the permits for Blue Moon, you'll see these kind of drill results coming out of NSG. These historical drill results were never assayed for gold, silver, cobalt, or sulfur. We are doing a reassaying program. And so when you look at our goal to get to 10 million tons of at least 2% copper equivalent to start production, we are already at that level, depending on your copper cutoff, without the byproduct credit benefits. So this is an extra exciting asset to balance all the other good stuff going on. So to conclude, we've got 3 critical metals assets that are new to the market in Blue Moon. We're looking at currently jurisdictions that have been overlooked tier 1 locations. We're attracting top talent in the business. And if we just drill and build these 3 projects, we think this has the basis of being a $1 to $2 billion company to the end of this decade. Key milestones to look for is starting of the portal construction at Nucir, which we're hoping to do this summer. Secondly, submission of the permit application for the exploration decline at the beginning of June. And thirdly, at NSG, starting the underground development and drilling some of those high-grade results in the 3rd quarter of this year. And hopefully through all of that, we can re-rate substantially from our very low base and trade up to our very successful peers that I mentioned previously. Matt?
Well, let me ask the obvious investor question, which is, why should they buy the stock today?
Well, this is a new story for the market. And so to incentivize new investors into a story like this, you have to have a compelling valuation base. But these three projects have seen little to no exploration for decades and have not had the capital to advance them like they should have. And so a combination of those things should lead to very dynamic news flow and an understanding of the asset value that we have here. So we believe the net asset value per share here is just over $20 Canadian or 750 million NPV8, and that's based on discounted cash flow models on all three projects using consensus pricing. So it's just about an appreciation of what we have to the market.
Okay. Lobo.
Slew of questions, but I'll limit myself. To me, the most obvious question is, if these assets in Norway are so great, why were they for sale?
Yeah, look, I wouldn't have gone to Norway 3 or 4 years ago. There hasn't been significant investment in critical metals projects for 50 years in the country. It was about 2 years ago, the EU changed their tune on mining and said, we actually need to secure critical metal supply on our own soils. And we are looking at, in particular, the Scandinavian countries where there's lower population density to achieve that. And Norway, of course, has a significant catch up to do with Sweden and Finland. So you go to Norway today and you're treated very well, very excited about mining, and they know that
Sorry, the question isn't about Norway. The question is, why were these assets for sale? Why aren't the Norwegian owners or its previous owners, whoever they were, seeing the same things about Norway that you're seeing and advancing these? Why did they sell them to you?
Yeah, that's because there's only limited amount of capital for mining in Norway. The country is not really up to speed with mining. And so in order to take the projects to the next level, they needed to get international capital, international know-how to advance these projects. There were multiple groups competing to get the Norcere asset, one of which is one of our major financiers. And this process became very robust through this year as people started appreciating Norway is on board for mining.
All right. And it sounds like you're gung-ho to build Norcere as fast as possible, but there's a feasibility mentioned maybe next year. So, I mean, it sounds like you've already made the decision. You're confident enough on your internal studies that you're just going to go ahead and do it. What happens if you do that study and it turns out that things are more expensive than you expect?
So there's been 15 years of engineering and permitting work done at Norcere, including an initial feasibility study by SRK done in 2020, and that was updated again in 2023. That was JORC compliant. We think it's a valid study. 43101 or listing on the TSX doesn't allow you to use a JORC compliant feasibility study. So that's why we did a resource estimate to start. And we're going to go underground and confirm advance rates, dilution, reserve conversion, all those kind of things, leading to a 43101 feasibility study mid next year, which we'll use to do project financing. So the work has been done to a basic engineering level. Now we need to catch up with more basic engineering, detail engineering, but at least the mining side we can get going on.
All right, thank you. The mention of optical sorting kind of scares me, but okay, moving along. You say that you can raise the rest of the capex without issuing shares. How much is that?
Yeah, just on optical sorting in the Cooper Schiefer, there's been a breakthrough with optical sorting. We're using the exact vendor that has done that good work, and we've done the test work, and it looks quite promising. On the capital side of things, we believe the capital cost to build all three mines, which is left unfinanced today, is about 425 million US. And of that, that includes G&A to the end of this decade. Of that, we see a reasonable path to 375 million of that being non-equity financed. Two of our major shareholders have indicated to us interest to backstop all or most of the capital costs in the 3 projects, and they've done so to the various governments as well. A 2% royalty sale on all 3 projects would bring 40 to 50 million US. The Blue Moon project could be financed through a precious metal stream 4 to 5 times over the capital cost. You get the picture. So we have that flexibility. If our multiple is strong, closer to 1 times NAV, we'll raise more equity. If it trades below 0.5 times, we'll do more non-equity.
Okay, one final thing, and I'll turn over the mic. I have a problem. Maybe it's just an emotional problem, and maybe Brent will have the opposite issue. But to think of California as a tier 1 mining jurisdiction just gives me the heebie-jeebies. And in particular, the story of, oh, it's a Republican county, it's private land. It reminds me very much of Idaho, Maryland. And we all know how that went. So I'm not sure there's anything you can tell me on that front. I mean, we'll just have to see if you're able to get whatever, new permits you need to finally go forward.
Maybe I can comment on that.
Sure, go ahead. I'll hand it over to the next person.
I believe in the case of Idaho, Maryland, they contested that they had a vested mining right, but they never had it in writing. We have it in writing. Putting that aside, Scott and I visited our congressman in DC in January. He was extremely supportive. We happen to have the most supportive congressman in the United States for critical metals development in our county. He sits on the subcommittee of natural resources for Congress, and Congress is sending constituents to our project with Scott and I next week, as well as key county individuals. Because we're all in private land, the county does all of the permitting. And we are building relationships with key county people, plus the support of Congressman McClintock to advance the project. Maurice is on the board of Equinox. They have 2 mines in California. Of course, they're operating, but they have the least amount of troubles in California. The state is also one that has not been infiltrated by the Silicon Valley types, and everyone's telling us we've got a good chance.
My regards to Maurice.
All right.
I don't know if she remembers me, but I remember her.
Sorry, Lobo. Adrian, go ahead.
Yeah, okay. I've got a few questions as well, if I may. So the first thing, if I may say, I don't know if you guys have a Bloomberg terminal or not. If not, I can help you with it afterwards. But Bloomberg doesn't have your 10-for-1 consolidation. And so when I first looked at it, I saw a 17 million market cap, and I thought, oh my gosh, this is too small for me. Didn't really pursue it. And then I see that Monial, is that what they're called, owns 130% of the shares. And so it makes it very difficult. What I'm saying is it makes it, you need to contact, I can't, I've tried it before with other companies. You need to contact Bloomberg to get them to fix that. I'll send them an email saying they're not reflecting the 10-to-1, but we'll see if that fixes it. If not, but you need to fix that, because obviously institutions will look at it and say, oh, I'm not going to, not going to look at this. So I had a couple of other questions, if I may. So you have $35 million in cash right now, is that right?
We raised $35 million net of transaction costs, and we've acquired the industrial land around New Sear. We're sitting around 25 million Canadian cash.
Okay, and do you have any warrants that are in the money?
We have 0 warrants outstanding.
Oh, excellent, good. So can you just help me go through, is that 25 million, I think you said, but how is that going to be spent over the next 18, let's say 18 months until the optimized feasibility study? You're not going to need any money for your work, including the development of the decline and...
Yeah, 80% of that 25 million is going towards the underground development optimization work in New Sear. The permitting cost for the decline is is not much at all. It's a few $100,000, and then we'll fund the decline development and the sale of a royalty on the project. And in the
Okay.
case of NSG, the cost to develop a kilometer to drill 10,000 meters is about $3.5 million US. We would probably raise some equity on the back of announcing that, but Nucir development activities up to the feasibility study are financed with our existing cash, and we have a standby facility with Hartree for $20 million that we can draw as well.
Oh, okay, good. And then lastly, if I may, just on two of your shareholders. First of all, can you tell us a little more about Monial? I've never heard of them. Tell us a little bit who they are and what their interest in mining is. And then secondly, you said Altius as a shareholder. Again, they don't show up on Bloomberg as a shareholder. How did they acquire an interest?
Sure. So Monial has been an investor in Nucir for over 10 years. They have made most of their wealth through power generation and forestry. This is their only mining investment. At this point, they're learning about mining and they're a holder. In the case of Altius, in my prior life as investment banker, I was their financial advisor on multiple transactions, including the acquisition of Callinan and the Chapada copper stream. It was Brien who convinced me to leave investment banking to start Adventus, and they were the founding shareholders of Adventus. At one point, they were over 20% shareholder of Adventus. And with that sold and me starting a new company, they, because of that relationship, put equity in to support me.
So this is just a regular equity interest.
Correct.
There's no royalty or anything.
There's no royalties, no nothing. They didn't vend any properties into this as well.
Okay, well, if you had anything to do with them acquiring Callinan and Silicon, thank you very much. As a shareholder of Altius.
I did, and at that time, that royalty had negligible value.
Yes.
That's the power of a portfolio.
But thank you for that. Okay, I'll pass it on.
Thanks, Adrian.
Okay, good. Well, as an investor looking at the market, I mean, everything looks grossly overvalued, with the exception of commodities, of course. But commodities are a broad asset class, and you've got zinc, you've got copper. So let me ask you, how much of your NAV would you attribute to zinc, copper, something else now and in the future?
Yeah, very good question. So I'm a copper bull, and if anybody followed Adventus, we were hell-bent on building the next greenfield copper mine in the world, regardless of the market backdrop and the Ecuador backdrop. So I believe copper will be $6, $7, $8 a pound in the next few years. And when embarking on Blue Moon, if I could have gotten my hands on copper, of course I would do it all day long, knowing there's lots of competition. So I'm grateful that we have these two Norwegian projects that are copper dominant. If you want to look at the pro forma metal mix, in the case of Nucir, it's 90% copper, 10% gold and silver. In the case of Blue Moon, it's 40% zinc, 45% gold and silver, and the remaining copper. And in the case of NSG, it would be about 50% copper, a quarter zinc, and a quarter precious metals. If you then do the pro forma of the company, you're looking at around 20 to 23% precious metals, about 10 to 15% zinc, and 60% approximately copper. So it is a copper company with byproduct credits, and we will definitely look to utilize the precious metals capabilities of these projects to potentially do precious metal streaming.
Okay, good. That's very helpful. And how do you see that changing in the future?
We will always be a base metal company. Maybe I'm a sucker for punishment, but someone needs to do it. Someone needs to build these mines. We're going to look at primarily copper projects, and maybe you can count on one hand zinc projects we're interested in, even though there's no competition. But think of it as copper with the odd zinc project and the precious metals as bonus.
Okay. Honestly, I'm not too familiar with the investment case for zinc. So what is the investment case for zinc?
The investment case for zinc is that no one cares about zinc and zinc stinks, but you still need it. There is a bipartisan bill in the United States for $1 trillion to build infrastructure, bridges, power lines, all those kind of things. All of that needs zinc. The United States doesn't produce a lot of zinc, but that's just the story globally. It's infrastructure that is degrading, that needs to be replaced, and power infrastructure that needs to be built with little to no exploration that's ongoing or very few new zinc mines that are being built. Currently, treatment charges for zinc, I believe, are at all-time lows, and that shows you there's a shortage of zinc concentrate, and I don't see that improving anytime soon.
Okay, just quickly, like what is zinc primarily used for? Is it involved in primarily in this green stuff like solar panels, electric vehicles, so forth? Is that a significant component of zinc demand? And if it is, what do you that seems to be kind of diminishing. So what do you where is the demand for zinc coming from primarily?
Well, it's all about galvanizing steel. It's a cheap way to stop corrosion of steel. So you could have nickel for your stainless steel on your fridges, or if you're talking about it from a big infrastructure perspective, you use zinc. So cars aren't going away. Infrastructure build is not going away. That's the main use of it.
Gotcha. Thank you very much.
Okay, thanks, Nick. Byron, you're up.
Okay, good, thanks. A couple of things we've already touched on, some of the things that popped into my head here. Clearly you're not a single asset play. It looks like you put yourself together as a three asset play. I was intrigued at the at what drill results you had on your presentation. You got some sweet numbers there in terms of copper, zinc. Did I hear you say that you have to, kind of re-assay the old drill cores or something? Do you have a handle, I guess is what I'm asking. Do you have a handle on what kind of elements and molecules you've got in your rocks down there?
Yes. So this slide shows the high-grade results from the NSG district, and in particular these zones. The mining district here shut down in the 1990s. It was run by the Norwegian government, very inefficient operations. They did not have a focus on exploration, and they didn't care about the byproducts that were being produced. But there's enough historical production results to get a sense of what the gold grade was, the silver grade was, sulfur, and if you look at this at some assays historically, there's a decent amount of cobalt. So when I suggested that I think those elements would add about 20% to the revenues, those are roughly based on historical numbers. So it just makes sense for us to re-assay that and to reset the economics and the paths forward with those extra elements.
Yeah, I mean, when I hear zinc, I think germanium and gallium as well, because those tend to be with sailorite. So, who knows, you might have some of that. I was having fun. I'm sorry, what?
On that, going to Blue Moon, we exactly were looking at that when you picked the project late last year, and we talked to the government about potential grants. The U.S. government is focused on critical metals for defense applications that they're short of, and gallium and germanium on that list. And so we looked at the historical concentrate test work, and there's very good numbers of germanium. So we submitted an application to the U.S. government that came back and said, interesting, advance your project to a feasibility study stage, and we may be there. But just like Adriatic, when we do our feasibility study, we're going to look at incorporate barite production, which is a critical metal and mineral, or it's banned from Chinese exports at least, pyrite, germanium, and gallium. Sorry to interrupt.
Oh, no, and then another thing, you're in Norway, you're in California, and I was having fun before we came on doing a little plate tectonics and putting you back together with Greenland, without as much ice. But you are way up north. Can you operate 12 months a year up as far north? I mean, you're up near Nordkapp. That's that's like really miserable place to be 6 months of the year.
That's what everyone thinks before they get there. We are 71 degrees north above the Arctic Circle, but there's a warm ocean current that goes up Norway there that keeps the average temperature 2 degrees Celsius. The coldest it gets is -5. Scott and I were there in January. No issues in terms of weather or moving around. There's a hydroelectric grid that connects all the towns, and in particular Hammerfest. I told the mayor of Hammerfest, you should become a sister city with St. John's, Newfoundland. It's the support city for the offshore Norwegian oil and gas. And right outside of Hammerfest is a $20 billion operating LNG terminal owned by Equinor. There's roads connecting everything, there's fast ferries, and there's airports. And there's a full workforce ready to go with LNS to start mining construction. So it's really amazing, but it's awesome too.
Okay, that's great. One last question. This is a throwaway sort of, but in California and in Norway, who are the opposition? Who do you have to overcome? You know, the NIMBYs and the no new mines kind of people. Are they? Do you have that problem in either of those places? And then I'm finished.
Yeah, in the case of California, the history of the Blue Moon asset was Maurice Belanger, Garfield McVeigh, and Harlan McMead at Westman Resources in 1989 completed a pre-feasibility study. That project, or Westman, was bought by Boliden. Boliden sold their international assets to LAC Minerals. LAC Minerals became Barrick. Then Harlan Mead took out of Barrick Blue Moon, Wolverine, and Howard's Pass. And he went to advance the two Yukon zinc properties, which were a struggle. And so the Blue Moon asset just sat there for 35 years, even though it looks like an incredible mining opportunity. We are now restarting all those activities with the first PEA ever, the first time a full-time team has been on it for quite some time. And it's full systems go. We have not encountered anti-mining or activist activity. I'm sure we will. So the best way I can answer it as, let's see how it goes under the current Trump regime. In the case of Norway, the project had the most extensive stakeholder consultation, 5 years of it in Norwegian history on any natural resources development project. Clearly, it's a major oil and gas country. It has metallurgical and power operations throughout the country. They had decided not to develop the mining industry, so it's a catch-up. But we think, and we have the support of all of the major stakeholders in the project, that we have the majority of the population of Norway supportive to build this project.
Okay, thanks very much. I yield the floor here to anybody else.
And next. Yeah, Mickey, you're up next if you're ready.
Okay, sorry. Yeah, I got a couple of questions. So, regarding your timeline on the SEER, basically this is an early stage development project, I think, exploration decline with a feasibility, 43-101 feasibility scheduled for, I think I read in your news release, after the 2026 decline exploration is completed. And then in your permitting, as announced today, your permit is good, assuming you achieve mining by September of 2027. That's 2.5 years. So this timeline, I'm questioning if it's realistic.
So there has been about 32 million US spent on drilling, engineering, and permitting this project over the last 15 years. It's definitely not early stage. As I mentioned, there's been 2 feasibility studies done on JORC compliance basis. and we have a mining contract signed, ready for portal construction to go in right next to this red mill building, approximately where my cursor is. This infrastructure here is about $100 million of sunk capital, and the first year of construction is going to be underground development. Then we have the 43-101 updated feasibility study or maiden feasibility study to the market in, call it Q2 of next year. And then there's another 12 to 18 months of construction before production, second half of 2027. All of that is very achievable based on historical work, which is extremely extensive, I might say, and included 5 years of consultation as well. In terms of timelines, we have this extension to start mining by September 2027. We expect mining to start this year, but the government is extremely supportive of us, and if we needed any extensions for whatever reason, they would grant it to us.
Okay. Next question would have to do with the Blue Moon, and you've got a PEA, and on most of us don't put a lot of stock in PEAs, I would say, but they're a beginning. So what is the CapEx, the IRR, and the net present value that you came up with that Blue Moon PEA?
So I asked your readers to look at the press release from March the 4th, but just the base case here, which utilized $4.20 per pound copper, $1.25 zinc, $2,200 gold, and $27 silver, showed a $252 million after-tax NPV8 and a 38% after-tax IRR, an initial capital cost of $144 million. That is from the date of full-scale construction. There is approximately $35 million to be spent between now and that start of construction, which primarily covers the underground development that we need to determine final geotech and to drill off the reserves. So a total of about $180 million required between now and start of production at the end of this decade.
Okay, and the next question on Blue Moon would be, so I worked in this district 40 years ago and looked at a lot of mines, and I can't remember exactly the Blue Moon, but even back then there was problems with drainage into Lake Shasta, particularly with the giant deposit, the Shasta deposit. Does this drain into Lake Shasta?
No, it does not. We've designed this project to be the most environmentally friendly and water friendly as possible for obvious reasons. We're doing a paste backfill and we're doing dry stack, and we are trying to design this project as close as possible to zero discharge. It's never possible, but as close to possible.
Well, I don't think you answer my question. That's well and good, but does it drain? The location of it, is there a stream that drains into Lake Shasta?
Not that I'm aware of.
Where does it drain?
Scott, would you know that answer?
I mean, it obviously drains into a river someplace, and I understand zero discharge, but
Yeah, no,
dry stack tails fail on occasion, have failed. So,
Scott, do you know?
I do not.
well, so the point being that Lake Shasta is a national recreational area, and it's got historically since the early 80s has had environmental opposition to development of massive sulfides, that deposits that drain into that lake. And finally, I'll make a comment regarding gallium and germanium. If there is gallium and germanium in your ores, that would report to the zinc concentrate, and you will not get paid for that by a smelter. That will be a smelter return unless you own the smelter. And there's one zinc smelter in the United States. Now I understand this would probably go across the ocean to Asia, but those metals are generally not payable because they're not recoverable. They report to the zinc con.
Yeah, I understood on that. Obviously, things can change. On the first part of your question, we have our water discharge permit in place, and we are updating the hydrology studies. I've seen the results of last week, and there's no red flags, fatal flaws, no water bodies that we are encroaching on. I mean, everything's been designed to avoid that. But I'll get back to you on the Lake Shasta because that's news to me.
Okay, thank you.
Thanks, Mickey. Lau, go ahead.
I'm down to one question, actually. Global mentioned that California gives him the heebie-jeebies as a mining jurisdiction. I have to say that I kind of feel the same way about Norway. My wife's mom lives there. It's just not an easy place to do business. So, and you yourself said that some years ago you wouldn't have considered Norway either. So my first question is, what has changed? And also, as a second part, Norway has a lot of tax nonsense, things like the tax exit tax, the wealth tax that they apply to individuals and in some cases to companies as well. So just for the sake of our viewers, can you put our minds at ease about any tax implications for corporate mining entities?
Yeah, there is the wealth tax for individuals, but from a corporate tax rate perspective, it's awesome. We're talking about a 20% corporate tax rate and a royalty to the government of between 0.5 to 0.75%. That's it. Obviously, value-added tax, but that's very common in most places. So it's about half the tax burden, the tax and royalty burden that you would have or we had in Ecuador. So very attractive from that perspective. As I mentioned, very cheap power and a government, both the national and the municipal governments that are very supportive for mining projects, for infrastructure projects, probably the most supportive I've ever seen in any country in the world. In terms of the government support, as I mentioned, things changed 2 years ago with the EU directive and has been updated over the last few weeks again, now specifically stipulating that they want to see 10% of all the critical metals production that Europe needs in Europe. And so Norway is doubling down on that initiative, but they only have so many projects that can advance to that goal, and we have the two most advanced. The other thing going for mining in northern Norway is affirming their national sovereignty, which is up there, you're pretty close to Russia. So they want to have additional industries with Norwegians settling up there for national security purposes. So both of those are combining together to really try to advance this industry. And yesterday, Boliden announced one of their largest investments ever in a major expansion of their zinc smelter in the country. So while that's not specifically mining, it is related, and it obviously they're very happy working in the country.
But Christian, sorry, Norway is not part of the European Union, and I guess that it's more up to them what they actually do on the ground. I think you said that 10 years ago you wouldn't have considered investing in Norway. So I'm just from the perspective of the Norwegian government, what have they really done to change their mind?
You're right. Norway's not part of the EU, but they're loosely follow the directive of Europe.
Loosely is the key word, I guess, here.
Yes, but they specifically have bought into critical metals mining, and we're seeing that with the support on this transaction. We've already seen expedited permit approvals on some of the projects. So you can be skeptical, And anytime it's a new country, I think it's fair to be skeptical. But I'm telling you what I'm seeing, and countries go in waves, up and down, and I think we're hitting both California and Norway at the right time.
Okay, thank you. I'll pass on the mic.
Great. Lawrence, you're up next, and then Brent, Brien, and Ed.
Okay, Christian, great presentation. Hearing your presentation here, it's pretty clear there's a path to billion-dollar valuation in due course. I guess the website, the PowerPoint, all the rest of it, that message doesn't come across nearly as well as it does in your verbal presentation here. So just kind of a comment in passing. On a specific, the JORC feasibility study from 2023, is that available? And is it relevant at all to understanding the current situation?
It is absolutely relevant. It is not available, and it's just a fact of congruency between JORC and 43-101 and what the Canadian regulators allow. Now, we could have taken the JORC feasibility study and just asked SRK to put our name on it and create 43-101 compliant feasibility study, but Blue Moon wants to put its own stamp on the project, and we've taken that decision, and we'll come up with a new optimized and improved study next year. But for those that are willing to or interested in seeing the report, we can obviously email it to you, and you can take a look at it. But under the consensus pricing that you can see that we used for Blue Moon, the NPV 8 after tax would be $500 million US, with NPV 8 from today mirroring the actual time for construction.
I would be interested in seeing it if you could
Yep.
send it.
Matt, I think you have that. Or if not, I'll send it after the call.
And I forwarded it along already.
Okay, and then just one other quick point. You talked about the timeline on New Sierra. I wonder if you could just elaborate a little bit, and in particular, when do you see the first cash flow coming from the project?
Outside of cash flow through construction on the aggregate quarry that is operating, we would be looking for first production in the third quarter of 2027. So call it September. For Beaver Creek 2027.
Okay, excellent. And again, the website, the PowerPoint, make it look like the timeline is much longer. And I think it could be important to really highlight that accelerated timeline.
Yeah, I mean, it's a good observation. There's some things I cannot comment on in this presentation that are going on in the background that you'll see in due course significant value add, and it just makes sense for us not to be completely transparent in our public materials until that happens. This is partly why this call is, or this forum today is very important to get the message out.
Okay, great. Thank you.
Thanks, Lawrence. Brent Cook.
Great, thank you. Christian, really good presentation. Much better than I anticipated from the start. I'm particularly interested in New Sierra. Looks like a good deposit. Who was the JORC report done for?
The JORC report was done for New Sierra, and okay. that was SRK doing it in 2023 last.
All right, and they didn't follow through moving that forward and sold it to you. I guess that goes to Lobo's question.
Yeah, they raised 32 million US, almost solely from Norwegian investors and Baker Steel. The major shareholders upon the sale were Monial at a third, Baker Steel at 22%, LNS, a major mining and tunneling company, at 10%, the CEO at 10%, and another rich Norwegian around 8%. That's 75% of the shareholder base with those five groups. Their strengths were not really raising capital. And so they were looking externally for potentially a sale to a producer or going public through a vehicle like ourselves. I mentioned one of our major shareholders was bidding for the asset, as well as other names that you would be aware of. We believe we paid around 0.2 times NAV for the asset back in November using about $4 copper. And I know from my experience at Adventus, junior base metal assets, whether they be greenfield or brownfield, are really not of interest to the producing companies. It used to be 50,000 ton per annum projects were of interest for M&A and base metals. Now it's 100,000 tons. So this at 20,000 tons per annum and a development stage project doesn't move the needle for the Capstones and the Lundins and all these kind of companies. And those companies are always in processes to buy producing assets. So they rather do that all day long than buy something like this. So this was a great opportunity for us to de-risk, improve, put in production, show a path to expansion to a rate that will be more meaningful. And as I mentioned, I think we can get to $1 billion value just on this asset.
Right. So it looks to me like, and I think you saw this in Adventus as well, you're sort of entering that dead zone in the Lassonde curve, and you've got enough money to do some things, but you're going to need a lot more money to do these feasibility studies, begin the underground work and such. What's it going to take to get your share price to move? What are you planning for this?
Well, I love that question. Because I lived the Lassonde curve, at least what I think the Lassonde curve, which is deep and much wider than people think. And in the case of Adventus, we were stuck in permitting for years and a government that didn't know which way it was going. We have our permits at Nucir. That pain was done by Nucir. We can now move on to the next stage, which is construction, which some people will say is part of the Lassonde curve. Others will say not. But that's also why we have two other projects and why each of the projects has very good exploration potential on their own. While Nucir is being built, we will have hopefully permitting success in California, and we're going to have lots of exciting drilling and underground development results from NSG. And we may put a drill on some of these deeper targets, higher grade targets at Nucir as well. There's plenty of balance that we can do between development and exploration to keep people excited and on a low cost basis. There's no helicopter assisted drilling here. There's $100 to $125 a meter drilling cost. On the capital side of things, we have this very well mapped out. I believe myself as somewhat of an expert when it comes to non-equity financing. We looked at, I think we pulled every string possible at Adventus in Ecuador to get to where we were. As I mentioned, I think there's $50 million of royalty financing capability by selling 2% royalty on each project. I believe the Nucir project, you can do $100 to $125 million, which is the remaining capital cost of the project, either as a stream or debt. We've got a proposal on each of those already. I think the Blue Moon asset, the remaining capex can be funded on a precious metal stream. This PA shows about 30,000 ounces of gold and silver converted as gold production per annum. If you wanted to stream that today, that would be over $400 million for a capex of $144 million. In the case of NSG, there's some precious metals there that probably will be more equity financed and or internal cash flow financed, but that's the third asset out of the three. It goes back to out of the $425 million of capex we see over the three projects, we think $375 million can be non-equity financed.
Excellent. Well, you've certainly thought everything through. It's good to see. I'd also be interested in that JORC report.
Yep.
And if you do organize a trip up there to tour that project, I'd be interested. Put me on the list.
Well, itinerary went out today for a site visit May 6th to 9th. We had a capacity of 10. There's already 10 going. We'll make it larger for this group if interested. So I'll send you the details.
Thanks and good luck.
Over, hope you guys don't mind. Brien, you're next.
Thanks, Matt. Christian, you answered some of my questions just now. I was curious about the Monial shareholding. They were one of the vendors of the Sear property.
They were the largest shareholder of Nucir at a third.
Okay, and they ended up, that whole Nucir group ended up with about 55% of the ownership.
Yeah, when we closed on Nucir and NSG, they were just over 50%, and then we acquired the industrial land around Nucir, so it was about 45% in the end. But you're close, yes.
And the rest of the financing, so they didn't put up any money to put up the property, right?
Yeah, of the Nucir shareholders on the financing, Baker Steel put more money in, and so did LNS. Monial did not put more money in. But Nucir shareholders, NSG shareholders, and industrial land, so that's WG shareholders, all of those guys are tied to an 18-month escrow release period. And from what I understand, including speaking to Monial, which was, I've spoken to them for hours, they're looking at this step in Blue Moon is not a way for liquidity, but a way to realize executing a construction of these projects and getting re-rated through that process.
Okay. Yeah, well, that answers some of my questions with the escrow then, because you did a $35 million financing. Who was in that, roughly?
Yeah, so Hartree was the largest component at $12.5 million, and they're the ones that have the $20 million credit facility and are huge supporters of what we're doing. The second largest investor in that would have been Wheaton Precious Metals at $5 million. The third would have been LNS at $5 million, and they've got another two coming in later this year. The fourth largest would have been Ross Beaty, and then the fifth would have been Altius. It was a wonderful book.
Yeah, I might bring Ross a little further up in the presentation. That's good validation. So they did the financing when the share price was post-consolidation about $4. They did it at about $3. And now you're somewhat underneath $3, but that's a good group of shareholders. I would not think that they would be too price sensitive at this point or impatient, but are there any catalysts coming up as far as stock freeing up, escrows coming off, or anything like that would bring stock into the market?
So when we started trading there on Friday, the stock had been halted for 3.5 months during a very volatile period, and there was a $900,000 financing done back in August, which the 4-month hold was skipped coming off, so they would have been held up for 6 to 7 months. So it was natural to have some dribs and drabs come out here, which you're seeing. There's no kind of major seller here. The guys that came in on this financing, which had no warrants, are truly long-term investors. In terms of the next catalysts for the project, we have some key hires that we're looking forward to announcing in the short term, one of which is already signed with us. We have the maiden NSG 43101 technical report, which will be out in April. We have the results of the reassaying program at NSG in Q2. We have the start of portal construction at Nucir somewhere in that time frame. And probably the most impactful will be once we start portal construction, I will be on an international global roadshow to get the word out to the institutional side of the business. We've had quite a few incoming queries, but between now and then, I'm keeping it to these kind of forums and the strength of our shareholder base to get this thing going, and then we can have the institutions pile in later. This is actually the opposite strategy than what I had at Adventus. We were extremely top heavy from institutions at the beginning, and then we filled in with retail, and liquidity popped up at the very end. Here we're trying to do it the other way around.
Okay. You talk about the belly of the Lassonde curve, but it seems like that belly isn't very long for Nucir. When were you talking about production again?
In Q3 of 2027.
And what would be your free cash flows out of that for, your run rate, at least at that point?
Yeah, the Blue Moon asset and Nucir asset are almost identical in terms of EBITDA and cash flow per annum, but specifically at 420 copper, you're looking at 65 million US a year of cash flow. Cut off 15, 20 million from that as free cash flow, so call it 50. But I talked about an NPV8 NAV of 750 million US based on the 3 projects today. That's $21 Canadian a share. If you look at the potential annual cash flow from the 3 assets at consensus prices, 150 million a year, give it a 5 times multiple, you get to the same result. So I think that is kind of a reasonable target for the company over the next few years.
Does that incorporate anticipated dilution from debt or streaming?
Well, there's if you do streaming right, there shouldn't be too much dilution to NAV. Debt more so. It does not include the potential 35 to 50 million I'm suggesting of additional equity financing that's required over the next 5 years. So we also need to know that each year, as we get closer to production, the NAV per share will go up because of the time value of money. So that's on a unfinanced basis.
Okay. Final question. Can you talk a little bit about that deep hole at Nucir? And will you be pursuing that at all with your funding or exploration? That's a pretty deep hole to test that. But I guess why did you drill it, or why did somebody drill it?
Yeah, I love that question. And it goes back to Nucir didn't have the extra money to do exploration, did very little on the fringes to kind of get a taste test, but couldn't follow up on it. And Maurice and I and Altius, the 3 of us, we did a due diligence on this. We thought the biggest upside on this project is exploration. It's a hidden gem, call it. So sediment-hosted copper deposits like the Cooper-Schiefer, why are they good? They're continuous and they keep on going. And if it's truly a sediment-hosted copper deposit, anywhere in the system, you should say, okay, this is where the deposit's supposed to be, and you drill it and you hit it. So historically, they've only drilled 5 holes, truly wildcat holes. We're talking about kilometers in between these drill holes, 5 holes below 700 meters depth. All 5 of them hit ore grade mineralization. So it's a checkbox on the style of mineralization. And the mineralization is still going. Like in the Cooper-Schiefer, you're down 1 to 2 kilometer depths. There's no reason why you can't do that here. In the middle of the deposit, you have 3.4 meters of 3.2% copper equivalent net recovery, and 9.7 meters of 1.6% net recovery. And this hole also has a 1 meter intercept of 19 grams PGE. We do not understand where that PGE is coming from. There is low levels of PGE, like 0.05 combined throughout the deposit, but something's happening in this area. We are planning at some point here to do a deep hole here with like a mother hole with daughter holes off of it to test this area because it is very intriguing. We will not get the decline far enough in through the development work before construction to drill this area from underground. But it's a exciting target. I see that being drilled over the next 1 to 2 years.
That 1 meter at 19.3 PGE, was that included within the 9.7?
Yes, it was.
Interesting. Okay, that's it for me.
Thanks, Brien. Ed, go ahead.
Hey, Christian, how are you doing, man?
Good. Love the grilling. Good grilling, though.
So, congratulations on putting this deal together. It's you got a lot of big players involved. Looks very interesting in that sense. So, I got some small questions first, and then I got sort of a bigger question. The small ones, what's the LOM at Blue Moon? I couldn't find that.
You cut out for a second, but I believe I heard the end of the question. So let me know if I cut out again. But life of mine for the feasibility study at Nucir is 15 years.
No, not at Nucir, at Blue Moon. I'm sorry.
Oh, at Blue Moon is, I believe it's 12 years, 11 or 12 years.
12 years. Okay. And right now you have what, 18 million cash, is it, I saw, or is it more?
18 million US. It's about 25 million Canadian plus an undrawn $20 million credit facility plus an additional 2 million coming in from LNS. In our press release this morning, we stated we have available liquidity of 40 million US.
Right. That's the line of credit or whatever.
Yeah, that's correct. Yep.
And the PEA, that's not available yet, right?
Yeah, the PEA, we're working through the report. It should be filed the first week of April.
Okay. All right. Now, on the blue, okay, so let me just try to get the story straight here. The priority, I get, the biggest project obviously is Nucir, right? So that's going to be your flagship project, right?
Yeah. We're trying to sequence at Nucir first, put that in production by third quarter 2027.
Right.
By that time, we've been doing all the underground work at Blue Moon. We're completing a feasibility study, so some exciting drill results there and advancing that project, and then we'll be continuing to drill underground at NSG and build that reserve target of 10 million tons at 2% copper equivalent. One thing, though, that is really neat about this portfolio, and I said this to Hartree and Scott when we left Norway at the end of January, was in 5 years, I can't tell you which of these 3 projects is going to be the most valuable to this company. Nucir has the near-term advantage because it's permitted and it's going to production, and of course, it's got the big upside at depth. But sure, if Blue Moon becomes Adriatic and triples in size, those economics will look a hell of a lot better than they're already looking now. And if NSG becomes that 50 to 100 million ton VMS district, well, that speaks for itself. So that's one of the great things about this portfolio, is that there's lots of levers.
Right. So at Nucir, is there any? Was that a mine before? Was it in operation before?
Yeah. That's a very good question. So in the 1970s, there were 4 open pit mines. If you go from the Red Mill building here up into the mountains, there were 4 small open pit mines. They produced about 3.5 million tons at 0.7% copper. At the time, because of low copper prices and sub-scale economics, they went under in like 1979. But it allowed the infrastructure that we were piggybacking on to be developed, which are still in great condition. Subsequent to those mines being in production, the sedimentary hosted copper deposit Nucir was discovered. So Nucir has never been mined before. They're several kilometers apart between the open pits and Nucir. So this portal that we're looking to blast this year is the first time it will ever be mined, and it's a different style of deposit than the 4 open pits.
Okay. And the 217 holes that you mentioned in the slide, is that to be drilled or is that past drilling?
That's past drilling. That's part of the $32 million of spending over the last 15 years.
Okay, okay. And so is there any capital on the Nucir property that you can refurbish, or is that going to be
Well, that's the beauty of this transaction. The third private company we acquired right before we started trading. This picture shows it a little bit better. So this here is a currently operating aggregate mine.
Mhm.
There is a quay or port here that can take ocean-going vessels, and there's a ship loading facility where you can put the aggregate onto the ship. We own all of that. All of the waste that will come out of the Nucir mine is suitable for aggregate production. So we actually can make money off of the waste. It's not in our economics in the feasibility study, but that is something that I think is upside for the project. There is another pier or quay here, which can take ocean-going vessels that have cranes on their vessels to unload whatever. This mill building is suitable to the installation of a 6,000 ton per day mill. It's in great conditions, and there are laboratory and other facilities to the right of it. There is a silo here. Right behind it, going towards the direction of the 4 open pit mines, is a 2.5 kilometer tunnel, which is 6.5 by 6.5 meters. You can still go to the end of the tunnel. There's no cave-ins after 50 years. It gives you a sense of the geotechnical aspects of the district. There are also certain buildings here that you can see. Those are barracks that are in good condition, that can sleep 50 plus people and have kitchenettes and all that kind of stuff. And then there are 2 high voltage power lines that are hard to see right behind it. With excess capacity, we have an agreement to take 30 megs off of that. And as I mentioned, this is the cheapest power in Europe that we have, and it's all renewable. So our estimation of the replacement cost of what we bought a few weeks ago for 16 million bucks, mostly in stock, is that 16 million today would be $100 million of capital cost. So that's why the feasibility study capital cost in 2023 to put this back in production was 100 million. No, without all this infrastructure, it'd be 200 million.
right? Thank you. And just one more question on the NSG deposit. I like the grades, and I like the idea of the gold and precious metals potential on that project. So why did it stop mining in 91? And similar question to Nucir, is that historical resource, was it known when they shut down the mine then, or is that a new resource?
Yeah, the Norwegian government that was operating it, government should not be operating mines. I guess it's a simple answer there. But there was no comprehensive exploration plan in the district. It was hodgepodge all over the place. We've got an exploration team that's coming together, digitizing everything, and putting together a key to the district and prioritizing the targets. To put in perspective about how unorganized they were. This RD zone, I said we're going to extend the existing mining tunnel a few hundred meters. We've got a permit to extend it for 1 kilometer, but a few hundred meters, we should be intercepting head on, horizontally, this VMS lens. That means back in the late 1980s, when they're drilling this, they were 200 meters away from these kind of grades, and they were drilling these intercepts from surface 1 to 2 kilometers deep to intercept that, but they were 200 meters away from it with a drift. It doesn't make any sense. So think of it as it was really easy mining and development for a very long time, and now we're coming back with fresh views, new technology, doing it the right way, and there's already a 29 million ton resource at a fairly low grade, but 29 million ton resource that's going to come out in this 43-101. Our focus is in these 4 lenses to focus on the high grade, and clearly the RD zone is where we'll start.
And what condition, just one more question, sorry guys. What condition is the flotation plant in on that?
Yeah, when we go to site, you will go into the mill buildings and you will be blown away. This picture does not give it justice. My sense is you could put a 60,000 ton per day mill in that building alone. We're only talking about 1,500 to 2,000 tons per day in the startup scenario. So the condition would be they were designed to withstand a nuclear bomb. The actual building is in very good condition. The size of it is mind-blowing.
All right.
10 cents to buy it all, exclusive option to us.
Yeah, nice. Thank you.
All right, great. Doug, your last one, and we'll let Christian go and just talk for just a couple minutes after.
Yeah, great presentation altogether, Christian. And I'm sure that the management of the company, including yourself, will be adequately compensated for having put this together. The last real capital was raised at around $3. At what level was the financing before that? And what are the options that current management has? And what are the options that are going to be given to new employees? What are the amounts and the numbers involved for those two things?
There's three things there. We worked at a very high pace, and we gave our life, frankly, to Adventus to get those permits and to get that thing moving. And we've been able to attract those top stars, such as Scott, for this company. And as I mentioned, we're mostly in our 40s, and this is our shot of making a home run. And it is that pitch that is attracting top talent that you'll see continuing coming into the company. So yes, option or DSU or RSU incentives are important. You'll see that we have no warrants and 700,000 options, RSUs and DSUs issued, mostly options. And those options are all above, or I would say 90% above where the stock's currently trading today. Scott and Theo, who just joined us a few weeks ago, got issued a few million options at equivalent price of $3.55 a share. So that's I think the second question. The third one is there was a $924,000 financing done in September of last year that was equivalent to the market cap at the time pre-consolidation, 3.5 cents a share that went to 40 shareholders. The majority of that placement participated in the $3 round. In fact, over 50% of the $3 round were people that bought that placement, which would currently be 1 to 2% of the overall shares outstanding.
How about yourself? How many shares do you have, Christian?
I have to disclose about 5,000 shares today in the open market. I'll file that later this week. I'm up to, on a post-consolidation basis, getting up to 600,000 shares and growing.
Oh, that's good. And just one other question, because your presentation was excellent and complete. Is there anything in the back of your mind that you're thinking of that might be a serious pitfall that you might wake up at night and it worries you?
Well, certainly not in the same way as Ecuador, where we have to worry about blockades, kidnapping, ransom killing, all those kind of things. We're pretty battle hardened from that experience. In the short term, I'd really like to get this stock moving and get the liquidity up. I never really valued it enough at Adventus until the very end, and liquidity brings more investors, and we do want to build up the institutional base. So keeping that momentum so we can re-rate to better multiples and get better access to capital and to execute on a business plan is an important thing, but that will just come. Of course, I sleep well at night. There was a question before about California, NGOs, people against the project. Well, we're going to advance this project, as I said we will, and we're no rookies when it comes to NGOs, having worked in Ecuador. So we'll have to deal with it, and the obstacles get thrown at us, and I'm sure that will be the same in Norway as well. Albeit we're coming at it with the experience of Norway being Canadian, as well, understanding the mining sector, and in a backdrop that I think is very conducive to mining in these new countries. So those would be my biggest concerns, as well as continuing to hire good people. Organization is only as good as the people you can hire. So continuing to build not only at the officer level, but also in the other levels below us.
Great. Okay. Christian, thank you very much. I will reconnect with you after, but great presentation. We really appreciate it. The rest of the panel will just stick around for a couple of minutes and wrap up, and we'll connect.
Awesome. Well, thank you everyone for the time. All very good questions. I will send an invite to everyone for the site visit, and look forward to connecting as the story advances.
Farewell.
Okay, bye-bye.
Thank you. Bye-bye.
All right, guys. I know, again, went longer. These seem to take longer than we expected, but the questions seem very good. So I'd like to keep it going. Just quick feedback. Is this something you'd consider investing in after what you've heard?
Yeah, maybe. I mean, I have to think about it a little more, but it looks like I like the idea that they're ready to go into production almost at the Nucir mine. I don't know about the Blue Moon project in California, if it hinges on Trump, right? I don't know, right? But I like the Nucir project, and if they can get that going, then it's a $5 or $10 stock. So,
yeah, I'd agree with Ed, Matt. To me, this whole thing is Nucir. Everything else in the presentation, at least, I think should have been presented as bonus. Not because they're not valuable, but I think it just confuses the story. Anytime you get beyond one project, you dilute the impact of the story. And I think what we're seeing in these two companies that we've talked to is that they probably need some help in marketing and preparing their presentations. To me, the real juice is coming at the end of these conversations. That he should have started with that picture of the portal or Nucir and saying, this is why Ross Beaty has come into this project along with all these other great institutions. This project has a feasibility study that was nearly completed under JORC compliance. Won't take that much, $100 million in financing necessary to get into production, and look at all the upside to it. Plus, you've got this deep story, et cetera, et cetera. And yet there's more, and then you go into the other two projects. So I think that's kind of what they need to do, is simplify the story, because it's really complicated. You have to go to all these different places and parts, and they need to kind of tell it as a narrative a bit better too. The whole financing, the fact that it wasn't trading for 3.5, 4 months almost, should have been presented as now it's available to the market. It's a completely new deal. Everybody's excited. All these people are getting into it. It's a fast track to production. We're eliminating most of the Lassonde curve, and we'll be able to drill, while we're developing. So I think that if you can pull that kind of stuff out of these people and out of this story, then I think it gets pretty compelling.
Yeah, that's great feedback. Great feedback, Brien. Anyone else?
Yeah, I agree with you, Brien. It's always better to have one project, one story, and then everything else is bonus for most investors. Can I just ask quickly before I make comments? This is private, is it? This is not this part of the conversation. Is this going out to the world?
It's still being recorded.
Yeah, still getting reports. So I would assume it could. I would assume it could.
Too late for me.
Go ahead, Adrian, lay into him.
Well, I'll be more discreet then. My concern, I think, one concern I have is that Christian, who, obviously we've known him in the past and they were successful in Ecuador. I had the feeling he was a little confident, overly confident. I think there were some legitimate concerns raised about California and Finland, frankly, as Norway, as political, as jurisdictions. I don't think if he's planning on putting this into production with a 2% royalty on everything and in a stream as well, that strikes me as kind of. So it's a 2% royalty on everything he was talking about, and then a precious metal stream. That's sort of beginning to get a little heavy, I would think. And if he's planning on doing it without raising significant amounts of equity, but is wanting institutions to come in, institutions just aren't going to come in, even if you double or triple the volume. It's trading 20,000 shares today. An institution is not going to start buying in the market at that level, I don't think. So an institution is going to say, when's your next financing? I'll come into your next financing.
That's a good point.
But I thought the story was great. Sorry, don't get me wrong. And there's clearly huge upside. I just need to be a little more convinced on the jurisdictional risk.
Yeah. I'll jump in on that. I second everything that's just been said. And if you're going to make it about Nucir, which is, the first step anyway, well, then you have a problem with the name of the company. The name is Blue Moon, and the asset Blue Moon is the one in California, which is the one that worries me the most. And between us, the issue with Idaho, Maryland wasn't just about the nature of the past permitting and so on. The locals got up in arms, and it's not like, they were discharging water or doing, they just drilled. They weren't building, they weren't doing anything. There was nothing really to get upset about. And this is a place where there's a freaking mining museum in the town, and it was, one of these counties, and it was county level permitting. There was a mining museum in the town. There were several big past producers in the area, and they were on private ground. All of the things that we just heard were the same in that case. And what stopped them wasn't the county commission. It was at least not until the locals got all up in arms. So the name of the company is Blue Moon. And Blue Moon is an area where anybody who's been paying attention to juniors trying to work something like that should remember this story. So I see it as a huge negative, an albatross, if nothing else, that justifies a pivot in the marketing at least. And Nucir, it made me very nervous that they're building this. That decline is a production decline. They're building this. And okay, they've got JORC studies, and that makes me feel better. Like at first I was thinking, oh no, not another one of these guys building a mine on a PEA. So I'll give them that. There's actual numbers there. But they're building, right? And so if they go ahead and then they get in there and then they find that it's not quite as imagined, they're already going to be in for a shitload of capital. So that always makes me nervous. I really like to see, even with a full feasibility study, things go wrong, right? So I see this as high risk, but if they do pull it off, then sure, there's great potential. And as a person looking for good copper stories right now, the answer to your question, Matt, is yes, I am interested. And by the way, I'm going to be in Europe in May anyway. So if they do have a spot on that field trip, I'd like to go or send one of my guys.
Yeah, I'll make sure everyone gets a copy of the invitation so that if you'd like to.
I'll chime in if you don't mind. I concur with the previous comments. A couple of points I wanted to emphasize. I mean, it's not so much an exploration story because okay, they've found they've found something in all three places. I am concerned jurisdictional, certainly California. There's no such thing as an easy mine in California. I think they need to work harder to convince me that they are and they can clean up the resource. I mean, oh yeah, they mined this 50 years ago and they stopped mining it 35 years ago, and the Norwegian had a mining company and they don't know what they're doing. Okay, that's all nice, but why didn't it work 30 years ago again? Explain that to me. And that's one angle. And then the other thing, this is on what Adrian said. I did feel myself getting a kind of a nervous pucker factor when he was talking about, oh yeah, we're going to do royalties, we're going to do streaming and everything. I was like, oh great, okay, so you're already kind of capping the upside on this thing because you're going to sell it off to whomever, So you should not be too glib about how much money you're going to raise, selling it to the royalty companies and the streamers, because you're going to just wind up behind that 8-ball, and you'll be one more company that can, you just can't squeeze enough juice out of the orange, when it's all said and done. But I'm interested. I'm intrigued. I'm not saying no. Ben is definitely worth following, and these guys seem really, aggressive and sincere. Good for them.
Yeah, I'll jump in now. I'm going to jump in now and say my concern, once again, is with.
I'm not hearing Mickey at all.
Like in buffer land or something.
There's
nothing
not either.
No, he's in Missouri.
Not the tell me state.
He's up in the Ozarks, guys. I thought the presentation was good. I liked the down of the deposits. There's jurisdiction risk everywhere and such. I don't see any urgency to buy it right now. It's something I'm going to watch, see how it plays out. I think they've got a lot more work ahead of him than he indicated. It's going to cost a lot more than he expects. And he is in that.
I'll chime in now and say I've already expressed my concerns about California. I also have concerns about the timeline for New Zealand, and it seems wildly optimistic, if you will, that they can be where they're sitting right now, that they can be in. And I don't know if it's commercial production or just some sort of production in 2.5 years, when they've got a decline to go, they've got exploration drilling to do, they've got a feasibility study. He seems to think that the September 27 of mining, when the permit has to be mining by September 27, and he seems optimistic that that can be extended, and I would submit that it would have to be. No, I'm in New Mexico.
Wherever he is, he froze again. Do you want to finish your thought, Brett?
No, I'm pretty much done. I think it's something to watch. I think it's going to take longer than they think, going to cost more than they think, and they're going to need to raise more equity than they think. But I like the story. The deposits look good, and it's a great team.
Okay. Anyone have anything else they want to add before we wrap up?
Hi, Nick. Good to see you.
Good to see you too, Lobo.
Okay. All right. Well, thank you guys again for participating. I really appreciate it. Your expertise really helps me understand these deals a lot better. And I'll give him some feedback that you gave me on his presentation, and hopefully he can improve it going forward.
Excellent. Thank you.
Thanks, guys. Nice to see you all.
Thank you.